Thanks very much. I'm delighted to joining you all here in the conference. Thanks very much for taking some time out to come and listen to the Fenix story. There's actually a little bit of a rugby joke in our title of the new Western Force in iron ore. For those who don't know, the rugby team in Western Australia is called the Western Force. And there was also a former iron ore upstart who claimed he was going to be the new force in iron ore. It was Andrew Forrest in 2004. So we're a very different company, but it's just a little bit of a tongue-in-cheek for anyone who does have a rugby pedigree. And if you are a proud New South Welshman, I did play 10 years for the Waratahs and remain the most capped second rower of all time. So I have split loyalties. It's great to be back in Sydney. Such an exciting time. We're doing some really good meetings here. Miriam and myself are on the booth. And if you have any questions about the presentation, come and see us. Fenix is an iron ore producer. It's inspiring to see so many stories here at the conference of companies that are outlining a pathway to production, exploration, feasibility study, funding, development. We last raised money from the market from our shareholders in 2020. We had defined a feasibility study similar to some of the studies you've been hearing about in this lecture theatre from aspiring companies, where we said it would take $15 million to build a 1.4 million tonne per annum mine, which is on the screen behind me, at Iron Ridge, that could put iron ore in a boat in Geraldton for 85 Australian dollars a tonne. We raised that $15 million. We've since produced 1.4 million tonnes per annum every year at Iron Ridge. In the last quarter, we did that for 75 Australian dollars. I guarantee you won't be talking to gold producing companies talking about their feasibility studies from 2020 and we're comparing to their current cost lines against expectations. So we've beaten expectation on time, on budget production. We've since paid back $65 million to those same shareholders in fully franked dividends, and we invested $200 million into the business, and I'm really excited to tell you a little bit about it. Before I skip past the title slide, there's a lot in this picture. In the distance there, just below the beautiful blue sky of the Midwest of Western Australia, lovely place to mine, you can see the hills of the World Range. There's a Wadjuri Yamaji Dreamtime story about an injured kangaroo that hopped inland from the mainland, from the coastline where it was speared, and everywhere it landed it bled. And those red ridge lines are, in fact, the iron ore deposits of the Midwest. There isn't a Pilbara-style 500 or billion tonne resource in the Midwest. There are lots of 10, 20 and 30 million tonne deposits. We have a unique business model to unlock the value of those deposits. It's not designed around building a railway to a billion tonne resource. It's not designed around building a new port. It's designed around existing infrastructure and flexible transport. We have three pillars in the business that I'll get into, but that's the distance. There's hundreds of millions of tonnes in those hills. We don't have an exploration function. We're not a geologist. In this presentation, you won't see one of those drill hole split sections with lots of pastel colours telling you about intercepts. We monetise existing deposits. Billions of dollars have been spent in those hills defining JORC iron ore resources. We have a couple of them underneath us. Just underneath those hills, you can see the pit wall and you can see the highest grade ore body in mainland Australia if you've got keen eyes. It's 65% iron, low impurities. And then in front of that, you can see our ROM pad, and in front of that, you can see a very small crushing and screening plant and a couple of product stockpiles, fines and lump. And you can see that we're over mining here. So just around the blue Western Force there, you can see a nice stockpile of lump waiting to be hauled in the unique quad super road trains designed by my fellow executive director, Craig Mitchell, 60 metres long, they're 200 tonnes, and that has just been loaded and it's about to drive 500 kilometres to the port of Geraldton. So really nice little picture, sums up our business. We're simple miners, 3-to-1 strip ratio, very, very small footprint, and we're in a really exciting part of the world and a lovely place to mine. I love the photo. The three pillars to our business, mining, transport, logistics and port, have all come together in an enviable track record. I outlined it in the simple reality about how we have self-funded our development since our initial capital raise. We pride ourselves, we're coming to conferences like this and talking about what we've done, outlining what we're going to do next, and then coming back having achieved it. So anyone who heard my presentation last year, we were expecting to commission our second mine, the Shine iron ore mine, and we're expecting to get approvals for our third iron ore mine. I'm very pleased to say that we commissioned our second iron ore mine, Shine, on budget, on time, and we're outperforming there. And we've achieved the approvals for W11. And so you can look at that track record at your leisure. This is the area that we operate in the world, the Midwest, just a couple of hours drive north of Perth, depending on how fast you're going. Really nice, easy location. Geraldton Port city, the centre of the crayfishing industry in Western Australia, and increasingly a very vibrant town with a port that the state government is investing $500 million in, with ambitions that it can export up to 30 million tonnes a year of material. We see ourselves as a big part of that. Most of our staff live and work in Geraldton. We have a training centre there, a workshop depot. We're actually building a 70-unit housing subdivision there to house our recruits. And then we move inland to where we've currently about to start our third iron ore mine and have a network of infrastructure, including 2 rail sidings and an emerging mining business. Let me show you what that looks like in a video. This is the Iron Ridge mine. I described it at the middle. It's the highest grade ore body in Western Australia. You can see a beautiful, thick, 30-metre wide ore body running right down the centre of that pit. Really, we pride ourselves on how clean this mine is, how simple it is. 1 digger, 4 or 5 trucks. And I mentioned very low strip ratio, very consistent production in terms of grade, consistency, quality, and also costs and production since we outline the mine. We've recently added 10 million tonnes to our resource base here. We're working on whether that we can convert some of that into reserve. We are constrained by heritage. Really simple crushing and screening here produces a very simple, this is direct shipping ore as it really is known. We blast rocks, we crush and screen them, and then we put them on the weighbridge, put them in these trucks, send them to Geraldton, put them in a boat and sell them to our customers. It's a really simple business. It's a very high margin business. The key to it is our ability to control our costs. We're very, very active across the business. These trucks are designed for the purpose. They're built in Western Australia. We buy the prime movers uniquely off Volvo. This is our training depot in Geraldton. We're just expanding that. We have a refuelling zone there. It's a bit like a hospital if you look at how clean it is. We take local Indigenous and anyone and train them. And then the real secret to our infrastructure is the port assets we have. If you're a bulk commodity producer, you need to be good at logistics, but most importantly, you need to have the infrastructure to be able to ship your product. And we have a huge competitive advantage at the Port of Geraldton. We ship in Panamax boats. Here's one of our boats. We a couple of weeks ago celebrated our 100th shipment of product out of Geraldton, and there's many, many more on their way. Iron Ridge, I mentioned, it's 1.4 million tonnes per annum. Earlier this year, we've achieved our designed run rate from Shine of 1.2 million tonnes per annum. We're actually outperforming at Shine because we're selling low-grade material which wasn't in the mine plan in the current market, so that's going to increase that production rate. Those 2 mines are in production, and we're currently about achieving a monthly production rate which would equate to about 2.8 million tonnes per annum. And in the September quarter, we will commission our 3rd mine at Beebyn W11. It's a greenfields project. We've taken that project since we secured a right to mine from Sinosteel all the way through environmental permitting, heritage clearance and mining approvals. We're now building a private haul road to connect that mine to our existing Iron Ridge infrastructure, and we're mobilising a mining fleet. And we're getting ready to go. That mine will run at 1.5 million tonnes per annum, and once it's operational in the September quarter, we'll be achieving a run rate of 4 million tonnes per annum. People who follow Fenix may know that last year we produced an EBITDA of more than 70 million Australian dollars, and we generated a net profit after tax of more than 30 million dollars. That was on 1.4 million tonnes of production. We're tripling production. Iron ore prices are staying at around $100 US. You can expect that we have the potential to triple our EBITDA going forward and triple our profits. And we've made it very clear, we have a very strong policy that where we have excess capital, we will return it to shareholders in dividends. The key to our business is logistics. This was originally a joint venture with Craig Mitchell's Newhaul business. It was so successful that, like the shaving company, we bought the business, and Craig's now the largest shareholder in Fenix. and we own 100% of not only the joint venture but the IP that exists in that Newhaul business. It is a unique road transport business, and it will be used not only at the moment for our iron ore, but increasingly for third-party logistics customers and a range of other commodities that we are certain that we can unlock the value in going forward. At the moment, we're an iron ore mining company, but actually our core competency is transport logistics. At the Port of Geraldton, you can see on the right-hand side of this slide, we have 3 sheds that allow us to store almost 500,000 tonnes of iron ore. To put that into loading perspective, we can load a Panamax in less than 20 hours. And that means that we have capacity here well north of 15 million tonnes per annum. Certainly, by our calculations, if the Midwest Port Authority's ambitions are to do 30 million tonnes out of Geraldton, we will be doing more than 10 million tonnes out of Berth 5. We're in a race to find those tonnes, either from ourselves and our own mining business or for other people's mining businesses, some of which you've heard from today. We're very active in the community. We've created 300 jobs in the Midwest. We're the headline sponsors of the Geraldton Buccaneers. They're a basketball team that are the NBL 1 champions. And we work very, very closely with the Wajarri Yamaji people. It's the largest native title group in Western Australia. And what we do is our partnership with the Wajarri Yamaji across our operations is absolutely essential. We see ourselves as a partnership business with the traditional owners, with Sinosteel, our off-taker and the owner of the vast majority of the tonnes that exist in the world range, with the Midwest Port Authority, with our employees, with our contractors, and most importantly, with our shareholders. There's a near-term catalyst. If you're interested in making some money, have a look at what happens when Fenix gets to 4 million tonnes per annum in the next couple of months. We're going to make a lot of money at the back end of this year. Iron ore is staying strong. The richest people in this country, dozens of billionaires, are iron ore people. I know there's a lot of people here touting uranium and rare earths and gold, but I haven't seen a lot of Australian uranium billionaires, and I haven't seen a lot of rare earth billionaires, and increasingly there's a lot less lithium billionaires than there used to be. So iron ore is a great place to be. We think it stays stronger for longer. It continues to outperform, and we are operating a cost that we are confident we can maintain our operations and maintain their profitability. Near-term catalyst, 4 million tonnes per annum. Clearly at the moment, from a mining company perspective, we're all hat and no cattle. We're getting to 4 million tonnes, but we've probably only got 3 or 4 years mine life in front of us. We are really confident there are more deposits to unlock. The secret is when you've got a port and you've got a haulage system that is incredibly efficient and can unlock the value in deposits, deposits find their way into your ownership. And so the next catalyst I would point to is stay tuned for further acquisitions from Fenix, particularly ones where we are going to leverage our infrastructure for profitability. We recently had a crack at CZR. It was what I called the last independent iron ore project of scale in the southern Pilbara. And we let that one go to Rio Tinto. They're a logical owner of that project. And we've shown some discipline in our growth plans. We will make decisions where they're appropriate to make them. And there are a range of other projects in iron ore and in other commodities that we continue to look at, and we're confident in that second item here on this slide that you can expect us to expand our inventory. And we're going to start generating some really strong cash flows, and we're expecting that the market will respond to those as we deliver them. So we've got a $215 million market cap. We've got more than $50 million in cash. At the moment, we've been spending some capital. We've spent $7.5 million commissioning Shine. We've put a radial stacker and built an inland port at Riverdini, which was an investment of $10 million. We've invested $25 million to build the private haul road and the mining infrastructure for W11. These are fairly modest investments when you look at the cash flows we generated. I mentioned that we invested $15 million to build Iron Ridge originally, and we've generated more than $1 billion Australian dollars on the back of that investment. We expect Shine and W11 to be similarly value creative. Last year we made a decision, given the iron ore price outlook at the time and given the need to conservatively manage funding those capital investments for growth without capital raising and without debt, to defer a dividend. That dividend policy remains in place. In the September quarter, when we're at 4 million tonnes per annum, all of that capital spend will be behind us. And you can expect, if you're a shareholder, we'll be making a decision that is consistent with the dividend policy. $215 million market cap. We've got $50 million in cash. We're making $5 million a month in the current iron ore price. Our iron ore infrastructure at Geraldton Port has a replacement value of 200 million Australian dollars. I expect we could sell it for that or greater. Our transport logistics business has more than $150 million of hard assets in it. They are available to haul iron ore, but they're also land rolling stock trucks that can be used for other purposes. And then we have a mining business that, whether you're neutral, whether you're negative on the iron ore business, it makes money. Have a look at Fenix. We're at the booth. We'd love to talk to you.